A very good evening and a warm welcome to Personal Finance. I'm Kukuletu Tsele. Now, the deadly trio, temptation, procrastination and impatience, are cited as the reasons for poor savings habits. Wikus Olivier from Debtsafe and Sankie Morata from the Financial Planning Institute join me now for a look at how we can become more savings savvy. Gentlemen, thank you so much for joining us this evening. It's a tricky topic for a lot of people to actually understand and comprehend, but let's get your insights first, Santie.
Okay.
Why is saving so difficult in South Africa?
I believe it is the culture. I mean, we've been used to the fact of not saving and being more used to the fact of borrowing the money from the bank actually to finance some of our things or some of our needs as well. And also the difficulty in terms of distinguishing between the need and the want. Mm-hmm. And if I may just elaborate further as well, in 2013, I mean, when comparing to the savings ratio done in 2012, as South Africa, we're standing at 13.5% compared to the gross domestic product. And we have dropped from the 14.5% done in 2012. That shows that our people are consuming a lot and there's more need for education and awareness in terms of savings.
Is this education and awareness working, Wikus?
Yeah, it's to a certain extent, but there's still a lot of ground to cover there. We did a survey to give you some statistics over the last few months, and we've had about 2,000 respondents. And we asked people simple questions like, do you have a savings plan? And of that specific question, 55% of the people said they don't have a savings plan. We continue to ask them, what percentage of your net salary are you able to save? 38% of those people said they don't save anything. So it's a great concern. You can say about 40% of the people aren't saving, they don't have a plan to save, and that comes down to education in terms of managing your finances, how to budget, and how to allocate enough funds to get your savings off the ground. Exactly.
So let's start on a positive foot. We're trying to educate the nation and those on the continent. If you want to start saving, where is the first place to look out for? Is it the products available? Is it having a goal in mind? Or is it quantifying the value that you're hoping to get at the end? Wikus?
Yeah, I would say it starts with determining what do you want to save for. Because just pushing money into a bank account or in some other savings vehicle might not be the best thing. First, start to determine what do you want to save for. Then determine how are you going to allocate these funds. Are you going to reduce your expenses? That gets down to the budget that I spoke about earlier. And then after you've determined your needs and your savings needs, then choose the best vehicle for those specific needs.
Sankie, you agree here clearly?
Yes. Also, what is important is to have a financial plan. I mean, as Wikus has mentioned, that is important to have a budget, but also consider your cash flow. I mean, make a balance, check as well of how much do you have after paying your expenses and know your income. Most of the time, people are scared of checking the reality in terms of what they receive and in terms of what they spend.
Let's be honest, because it's not a very pretty picture most of the time, right?
Yes, that's correct, but you gotta have to deal with it. And also, what is important, remind yourself, why am I saving? What are the goals? What are the intentions? What do I want to achieve? And most of the stuff as well that we need to take into consideration is to celebrate the successes after saving, after you've achieved the goal. And celebrate that, because then you'll have the courage to continue. Maybe you save to send a child to tertiary institution. Make sure that after achieving that, you celebrate it and you record it and you acknowledge the fact that you have done that. And that will give you the courage to continue further.
So we need a goal in mind, we need to have a set objective, and also maybe celebrate that milestone once it's achieved. But before we achieve it, we need to start somewhere. And for most people, saving either happens when they put their money into a piggy bank, underneath their mattresses at home, or into a bank account. Are these the initial places where people need to start, or broaden their perspectives when it comes to product offerings?
Definitely, you're going to have to do something every day if you want to get to the discipline of saving. You got to ask yourself, okay, if I want to look clean and smart, I take a bath every day. So every month or whatever quarter or term that I'm using in terms of saving, I must do that repetitively. By doing that, you actually build in the culture of saving. And please look at certified financial planners or financial advisors and learn more, research, and check where you actually can put your money in terms of the investment vehicles.
Let's touch on some of those product offerings, because banks also have, various types of fixed deposits or money market accounts that people can access. You've got your retail savings bonds, unit trusts as well, ETFs, the list goes on. And for some people, it's very confusing. What's the initial step to take here, Wikus?
Like I said earlier, it depends on your goals. If you want to save up for emergency fund, it's important to keep those savings liquid so that you can access them quickly in case of an emergency. You should also remember that if your savings isn't growing and it's not beating inflation, then you're actually losing money.
Explain that concept, because I understand the analogy of a Pac-Man that comes and eats away at some of your money.
Let's say inflation is at 4%, but your savings is growing at 3%, then you're losing 1% of your value of your money over the time. So it's important when you pick an investment vehicle to make sure that the investment growth there is more than inflation. Then you should be fine in the long run.
Something else that they've alluded to is what the eighth wonder of the world, compound interest.
Compound interest.
The power of compound interest. Sankie, I'm sure you have some analysis on this, and sometimes that people don't take into consideration when it comes to saving.
Yeah, it's time value of money in terms of what would be arranged today cannot be the value of that in 10 years' time or in 5 years' time. And I think it's important for people to realize that and link that with the inflation as well.
So let's draw this in line. We also have the tax-free savings accounts coming up at the end, or rather towards the beginning of March, which is next week. Is this another option for South African consumers to look at when it comes to saving?
It's a great option or vehicle actually in terms of encouraging the people to save. There are tax advantages as well in terms of looking at the fact that, the income that you'll get out of that will be tax-free, as well as the capital. There won't be any CGT implications in terms of that. And also, you are able to draw the money at any time that you want, and also it's a lifetime vehicle that you can use. For us, it's something that is actually would help the consumer out there and encourage them to save in an environment or vehicle that is sort of risk-free as well, because also the performance costs as well are not being charged in terms of that particular vehicle.
We touched on two major things there, the fees involved when it comes to saving, as well as tax. From your perspective, Wikus, is that where a shortfall that a lot of South African consumers don't pay attention to, the cost of actually having to save, and the tax benefits, if there are any?
Yeah, that's why keeping your money in a normal savings account, even though they call it a savings account, the monthly subscription fees and the admin fees and things outweigh the interest that is earned on that account in most of the cases. And consumers aren't really looking into the detail of those accounts. And if you do have savings, even if you invested in some or other investment fund or something, there's also brokerage fees when you withdraw your investment or those types of things. And it's important that consumers are aware of those, what they are, and what the implications are on your savings bulk.
And when it comes to riskier assets like investing in equities or international bonds, does one need to know exactly what they're doing before venturing into that market, trying to increase their returns?
Gugu, it is quite important. You gotta have to do a risk profile. To test your risk appetite in terms of investing in those equities or in any of the forms of investment classes or assets, because your risk profile is determined by variables, by different things as well, in terms of your appetite towards risk, your age, your stage in your life cycle, and what you want to achieve as well. It's quite important.
I want to pick your brain on the informal market. In South Africa, we're known to have a very vibrant stockfile market, which goes into the billions. It's been working for a lot of people, but I'm sure there are certain things that they need to keep in mind before investing with a particular club.
Yeah, the stockfiles are very informal. Some of them are sitting on millions of rands, but they don't have the financial background and education to use those funds properly. It's a great savings vehicle because there's peer pressure. from your friends and family and people in the community to add funds to this. And people are saving a huge amount of money as a percentage of their net income into these stokvels. Some of them even save up to half of their net income into those stokvels. But they withdraw the cash there and they benefit from it once a year, or however the membership put together those constitutions. But I think there's a real need to educate these stokvels to become formal cooperatives and financial cooperatives, to get a constitution in there and let your members' money grow. Because many of them are just sitting on those cash reserves.
Charging high levels of interest too, hey? 30% plus from what I hear. But time now for us to get key takeaway points with regard to our discussion today on savings and the options available for you. Let's cross to our note to self. Sankie, let's start off with you. We've said quite a bit when it comes to taking that initial step to get saving, but the 3 key takeaway points for someone watching tonight.
Set a goal, make a plan, look at your budget, and start doing it. Do it. It can be done. It has been done.
Are you sure there's no nervousness, there's no risk? Just do it nonetheless.
There is risk, but take calculated risk, and also look at having an accountability partner. Your partner at home, your wife, your husband, let him check how much you're contributing as you promised before. I think that will help as well.
Exactly. Wikus, from your perspective, top three takeaway points for this evening.
I would say if you're not saving, it means that you're making debt. So save to stay out of debt, save to invest, and then save for your retirement. That's the most important things in my book.
Gentlemen, thank you so much for your time this evening and interesting insights on saving. Hopefully you guys at home will get the ball rolling and just do it, as Sankie has said. But that's it for Personal Finance this evening. Thanks once more to Wikus Olivier from Debtsafe and Sankie Morata from the Financial Planning Institute. Remember that we want to hear from you, so get in touch. Send us a tweet at CNBC Africa using the hashtag Finance410 or to myself at Kukumfupi. Until tomorrow evening, it's goodbye for now.